If you're buying a condo in Totem Lake, Juanita, downtown Bothell, Linwood, Edmonds, or anywhere in King or Snohomish County, stop scrolling because the financing rules change this week and they could affect whether your loan gets approved. I'm not talking about interest rates. I'm not talking about home prices. I'm talking about new Fannie Mae condo financing rules that officially apply to loan applications dated August 3rd, 2026 or later. These changes affect how condo projects are reviewed, what insurance is required, and what buyers need to know before writing an offer. So if you're planning to buy a condo in the next few weeks, or months, or years, and you are already under contract, this is a video you don't want to miss. By the end, you'll understand what changed, why lenders are paying close attention to condo projects, and the simple steps you can take to avoid delays or surprises during escrow. Comment condo below if you are currently shopping for a condo, and I'll send you my updated condo buyer guide. One of the biggest frustrations I see with condo buyers is that they think once they are pre-approved, they are in the clear. Unfortunately, that's not always the case. Buying a single family home and buying a condo are two very different lending experiences. When you buy a condo, the lender isn't just approving you, they're also evaluating the entire condominium project. That means your loan can run into problems even if your income, credit score, and down payment are all excellent. Why? Because lenders are also reviewing the HOA's financial health, insurance coverage, reserve funding, pending litigation, and other project details. With the latest Fannie Mae updates, those project reviews become even more important. One of the biggest changes is the retirement of the long-used limited review process for applications dated on or after August 3rd, 2026, meaning many condos purchases will require a more comprehensive review than before. That doesn't mean you can buy a condo. It does mean buyers need to ask better questions earlier in the process. Think of it this way. You are not just buying unit 3 or 4, you are buying into the entire community. And if that community doesn't meet lender requirements, financing can become much more complicated. Stay with me because the first change is the one that's likely to affect the most buyers. Change number 1, the limited review process is going away. For years, many condo purchases qualified under something called a limited review. Think of it as a faster lane. It requires less documentation from the condominium association and often help loans move through underwriting more efficiently. Beginning with loan application dated on or after August 3rd, 2026, that option is being retired for Fannie Mae loans. So what does it mean for you? It doesn't necessarily mean buying a condo is harder. It means lender may need more documentation before they can approve your loan. That documentation could include updated HOA financial statement, insurance information, reserve detail, project questionnaires, and other records that weren't always required under the streamlined process. If your HOA is organized and responsive, this may not be a big issue. But if documents are outdated or slow to obtain, your closing timeline could be affected. This is why I encourage buyers to work both with an experienced lender and a real estate agent who understands condo transactions. Knowing what to request early can save weeks of frustrations later. If you're already under contract on a condo, ask your lender which review process applies to your loan. Change number 2, HOA insurance is under more scrutiny. The next major update involves insurance. Fannie Mae has updated property insurance standards for condominium projects, including a maximum allowable per unit deductible of $50,000 on the HOA's master property insurance policy. When a master policy includes a per-unit deductible, borrowers are generally expected to carry an individual HO6 condominium policy that meets the applicable requirements. Why does that matter? Because your lender isn't only looking at your personal insurance anymore. They're also evaluating whether the HOA's master insurance policy meets current lending guidelines. If the association's insurance doesn't meet the required standards, it could delay or in some situations prevent conventional financing until the issue is resolved. That's why I tell condo buyers to avoid falling in love with the property before understanding the HOA. The building matters just as much as the unit itself. This is also why you will often hear lenders ask for insurance certificates or HOA documentation early in the process. They are trying to make sure the project itself qualifies. If you never heard of a HOA6 insurance policy before today, don't worry, most first-time condo buyers haven't. Comment insurance and I'll make a separate video explaining exactly what it covers. Change 3. Buyers need to start their due diligence earlier. Here's the biggest piece of advice. Don't wait until you're under contract to learn about the HOA. Ask questions early. Before you write an offer, find out how healthy are the reserves. Are there any pending special assessments? Has the association completed recent reserve studies? Is the building involved in litigation? How responsive is the HOA when lenders request documents? These aren't just questions for your peace of mind. They are questions that can directly affect financing. The stronger the condominium association, the smoother the transaction actually becomes. I also recommend buyers choose a lender who regularly finances condo. Condo underwriting has always been more detailed than single-family home underwriting, and these new standards make experience even more valuable. A lender who closes condo loans every week will often identify potential issues much earlier than someone who rarely handles them. If you are currently looking at condos in Bothell, Kirkland, Linwood, Edmonds, or Bellevue, save this video. You may want to come back to it before writing an offer. Does this mean you should avoid condos? Not at all. Now, after hearing all of these changes, you might be wondering, should I just avoid buying a condo altogether? My answer is absolutely not. In fact, condos continue to be one of the best entry points into homeownership throughout King County and Snohomish County. In many neighborhoods like Totem Lake, downtown Bothell, Juanita, Shoreline, and parts of Bellevue, condos provide an opportunity to earn real estate at a price that's often significantly lower than a comparable single-family home. For many first-time buyers, that's exactly how they begin building wealth. The key difference now is that preparation matters more than ever. The strongest buyers aren't necessarily the ones with the highest income. They are the ones who understand the process before they fall in love with the property. Buying a condo has always involved two approvals. First, the lender has to approve you. Second, the lender has to approve the condominium project. These new guidelines simply reinforce how important that second step has become. And that's why education is so valuable. The more you know before you write an offer, the fewer surprises you encounter once you're under contract. If you're planning to buy within the next 6 months, comment buying below so I know how to create more videos, especially for first-time condo buyers. Let me give you an example on how these rules can affect a transaction. Imagine two buyers. Both have excellent credit. Both have stable jobs. Both have enough money for the down payment and closing costs. Buyer number one chooses a condo because they love the kitchen, the updated flooring, and the location. They write an offer immediately without asking many questions about the homeowners association. A week later, The lender starts reviewing the condominium project. Now they're requesting insurance certificates, financial statements, reserve information, and additional HOA documents. The association takes time to respond. Some documents are outdated. Others need clarification. Suddenly, what looked like a smooth transaction becomes stressful. Closing gets pushed back while everyone waits for paperwork. Now, let's look at buyer number 2. Before writing an offer, they ask the lender if there are any concerns with the condominium project. The real estate agent requests the HOA documents early. The lender reviews the project before major deadlines arrive. Because everyone worked proactively, there are fewer surprises. The loan stays on schedule. Closing happens with much less stress. The difference wasn't luck. The difference was preparation. That's why I always tell buyers that purchasing a condo is more about than choosing the right unit. It's about making sure the entire project supports a successful loan approval. Have you ever had a home purchase delayed because of paperwork or financing? Share your experience in the comments. Your story could help other buyers. My advice before you write an offer. So, what should you do before writing an offer on a condo? Here's the checklist I would recommend. First, get pre-approved with a lender who regularly finances condominium. Not every lender has the same level of experience with condo underwriting, and having someone familiar with these requirements can make a huge difference. Second, ask questions about the HOA early. Find out whether there are upcoming special assessments. Ask whether the HOA has completed a recent reserve study. Review the monthly dues and understand what they cover. Learn about the master insurance policy and ask your lender whether they foresee any concerns. Third, budget for more than just your mortgage payment. Remember that condo ownership often includes HOA dues, your individual HO6 policy, utilities that may or may not be covered by the association, and routine maintenance costs. Fourth, don't assume every condo project qualifies for every type of financing. Some projects are easier to finance than others, which is another reason to work with professionals who understand the local market. Finally, be patient. These additional reviews are designed to help protect buyers and lenders by making sure condominium communities are financially stable and properly insured. Although the process may involve a little more documentation, it's ultimately about reducing risk. If you like a printable version of this checklist, comment checklist below and I'll send it to you. What this means for King and Snohomish County buyers. Here in King County and Snohomish County, condominiums remains an important part of the housing market. Whether you're looking in downtown Bothell, Totem Lake, Juanita, Edmonds, Linwood, Mid Creek, Bellevue, or Kirkland, condos continue to offer opportunity for first-time buyers, downsizers, and even investors. I don't believe these new financing standards should discourage buyers. Instead, I think they reinforce the importance of working with the right team, a knowledgeable lender, an experienced real estate agent, a responsive escrow company, and a HOA that's organized and financially healthy. When those pieces come together, condo transactions can still be smooth and successful. The buyers who are best prepared will continue to get great opportunities, and that's exactly what I want from clients. If there's a condo community you are interested in, let me know in the comments. I may feature it in a future neighborhood tour or market update. Final thoughts. Whenever lending guidelines change, it's easy to feel overwhelmed. Headlines often make it sound like buying a condo has suddenly become impossible. That's simply not the case. The process has evolved. It hasn't disappeared. The biggest takeaway from today's video is this. Start early. Ask better questions. Choose professionals who understand condo financing. And don't wait until you're under contract to learn about the homeowners association. decision. A little preparation today can save you a lot of stress tomorrow. If you're thinking about buying a condo anywhere in King County or Snohomish County, I'd love to help you navigate the process with confidence. I've updated my 2026 Washington Condo Buyer Guide to reflect these new financing changes, and it includes questions to ask before writing an offer, a condo financing checklist, HOA document checklist, insurance questions to discuss with your lender, common financing mistakes first-time condo buyers make, tips for avoiding delays during escrow. Simply comment condo below or send me a direct message and I'll send you the guide. If you found this video helpful, don't forget to subscribe, because every week I share practical advice for buyers and sellers throughout King County and Snohomish County, along with market updates and neighborhood tours and tips to help you make smarter real estate decisions. I am Marie-Noelle Metseye. Thank you so much for watching, and I'll see you in the next video. Bye-bye.